Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best. Okay. It's not like Google and Facebook. It's not like Apple and Amazon. Yeah. We can debate Apple or Amazon. What's better? They both look like tech monopolies to me. They both look pretty good. On the other end, Bitcoin or no, Bitcoin. Bitcoin's crypto asset. This entire idea of like 60% dominance is bullshit, ridiculous, stupid, right? Like it's stupid. It's not 60% dominant. It's like 96% or 95% dominant, right? The thing, if you compare it as a crypto asset to a like kind of proof of work crypto network, right? That's meant to be a store of value. You know, you're lucky if you can scrape together 5% of other stuff in the last bucket. So there is no real competitor. Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You know, you're speaking like a crypto trader right now, right? Like, yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, you know, Venezuela. I mean, you think a Venezuelan company is going to like, quote unquote, take some money off the table by selling their U.S. stocks and their U.S. dollars to buy back into local currencies? Or then, you know, in Zimbabwe, you think they would take money off the table, right? Like the point is, if you have the superior asset, it's going up forever, Laura.
Why don't you break this down simply for people like me that don't fully understand it?
Okay. Well, let's start with the basic principle. People came to the United States for two things: property and freedom. And Bitcoin represents property and freedom to 8 billion people. Satoshi created a computer program that would run in a distributed fashion on computers all around the earth. And that program creates 21 million virtual coins in cyberspace. The way it works is he created perfect digital gold on an open monetary network. And so that means if you wanted to save $1,000 and you wanted to have it beyond the reach of a company, a CEO, a government, a bank, and you wanted to have personal custody of it, you could have that with Bitcoin. Bitcoin is a technical solution to give 8 billion people property rights. If I can own $100 in my hand as easily as I can own $1 billion. And we've never had that in the history of the human race. So what does it mean to El Salvador? Well, at El Salvador, you have a bunch of people that don't have a bank, and they don't have assets, and they don't have access to Wall Street. So when their relatives remit money back to El Salvador, they lose 10% of their money through money transfer agents. Once they get the money, they lose 10 to 20% of its value a year because they're storing it in a currency, not in an asset. The exciting thing about Bitcoin is Bitcoin lets you save your money in an asset that goes up in value, and it lets you move that asset at the speed of light all around the planet. And what the president of El Salvador realized is, using the Bitcoin network, they could cut $1 billion of cost in remittances every year to their people. They could put themselves on the world's first digital monetary network. And instead of their people losing 10 to 20% of their value a year and 10% when they move it, they're going to actually make money, and they're going to be able to move that value around for free. The point of Bitcoin is to fix the money. And money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's the problem. That's why empires collapse. That's why economies collapse. What is Bitcoin? Well, Bitcoin is the world's first engineered monetary system. And what happened is a set of engineers, nameless engineers, recoiled in horror after the great financial crisis with all the bank bailouts. And they looked and they said, this just isn't fair. It isn't right. We want to create a better money. And they used two technologies. They used the internet, the idea that I could network hundreds of thousands or millions of computers. And they used cryptography, the idea that I could cryptographically sign something so that it could not be tampered with anyone, friend or foe. And using those two technologies, they conceptualized the idea of an immutable ledger, if you will, a bank in cyberspace. What if 100 people got together, 100 people with money got together, and they said, we're going to create a bank in cyberspace. And we want to put our money there, and we don't trust each other. We don't trust the government. We don't trust any corporation. We don't even trust any one computer. So we create a program that keeps track of a ledger, 21 million coins, or shares in the bank, divisible by 100 million, called down to a Satoshi. So 2.1 quadrillion Satoshis. You don't have to know that. All you need to know is there's 21 million coin units. You can't make any more. And they wanted to create it so that they could send their money to each other, to anybody in the network. They could store it for 1,000 years, 10,000 years, 1,000,000 years, forever. And they don't have to trust anybody. So they created this idea of Bitcoin. It's an asset that's protected by cryptography, and it's stored on a ledger. The software administers the ledger. The twist is we distributed the software on thousands and thousands of separate computers. Every Bitcoin node is running a copy of the ledger. So everybody in the world that has their money in the bank has a copy of all of the money in the bank and all the transactions since the beginning of time. So it's the immutable truth. Every 10 minutes, the system batches a set of transactions and then redistributes the money based upon the instructions of the owners. If I want to send you my Bitcoin, I send it and it goes to you. And every single computer on the network updates that. And they all check it cryptographically using modern encryption. Now, how do we defend the network? There's really three nodes of interest to make this compelling. The first node is that Bitcoin node that keeps track of that ledger. It's the most secure database in the world, and it's a database of immutable truth. It's the ledger of money. The second node is a miner. It's SHA-256, or it's an encrypting miner that's generating hash functions to protect the network, and there are millions of them. And they're all competing with each other to build the next block. There's only 1 out of 2 million involved in this network. It's like every miner gives you a lottery ticket, and 1 of the 2 million will get to build the next block and will get paid a lot of money, like $300,000, and you don't know which one. So the miners are a wall of encrypted energy. They're converting electricity into hashes, and then inside that wall of electricity, or wall of energy, is the Bitcoin ledger, which is distributed in a decentralized fashion. And there's one other interesting node called a Lightning node. This is a layer 2 decentralized system. This is decentralized payments. It'll move small amounts of Bitcoin at the speed of light programmatically, almost for free. Okay, so Bitcoin is a decentralized piece of software. The brilliance of it is it's a bank in cyberspace that nobody controls, nobody can corrupt. It's a bank run by incorruptible software offering a global, affordable, simple, secure savings account for everybody on earth that has neither the means nor the inclination to run their own hedge fund. Right? You have some money, you have life savings, you simply don't want to lose it. You want to put it in a bank. So Bitcoin is that bank in cyberspace. These engineers came up with this idea.
Who are the engineers?
Well, we don't know. We know some of them. They're the cypherpunks. They were into cryptography. The most important of them was Satoshi, who we don't know who it was. Satoshi wrote the white paper, created the first version of Bitcoin, gave it to the rest. And initially, there wasn't any money in the network. They just ran it for a year as a hobby, right? And then over time, there was a famous transaction where somebody bought a pizza, right, for like 10,000 Bitcoin, one pizza. And that was the first transaction. And then the network gradually began to monetize as people bought into the network. And so it's like a fire in cyberspace.
I believe you said in 2013 Bitcoin's going to zero, but you flipped. You started educating and getting a little bit more clear, and then you went to a different direction. Even Munger recently said, Charlie Munger said the following. He says, I wish it, and this was last week, I wish it had been banned 2 weeks ago, immediately, and I admired the Chinese for banning it.
What you're seeing is a shockwave moving through the culture. You're seeing the most disruptive force in the world right now, and it's slamming into people and institutions faster than they can absorb it and appreciate it and understand it. And this is like shockwaves in the real world, right? If I move an airfoil through the air faster than the speed of sound is the rate at which air communicates with itself. The air can't get out of the way. I pound into it. I create massive turbulence and noise. The way to solve it is you go slower, but then you're not supersonic. Charlie Munger wasn't an advocate of Apple Computer, right? How about Amazon, right? How about Microsoft, right? Warren Buffett's a friend of Bill Gates for how many years, and he still hasn't bought Microsoft stock? And Microsoft is an idea that was, fairly well understood 40 years ago, 30 years ago. So what you have is something so powerful that everyone's being asked to have an opinion, right? Presidents, the president of Russia, the president of most nation states, they're asked to have an opinion. Every investor's asked to have an opinion. But what if I told you couldn't really understand it without 100 hours of time invested? How many people after the age of 40 spend 100 hours studying anything? Like once you get to, how about age of 65?
You don't think a Munger, Buffett, Gates, these guys spent 100 hours studying Bitcoin?
Aren't you sure they didn't? Isn't it obvious? I would say it's almost certain that he hasn't spent 10 hours. And so I would say the same with most macro investors though right now. You know what? I would say the same with a lot of crypto investors. The world is full of, okay, how many people, I mean, I see it because I see it in my feed. Most people in the crypto space haven't spent 100 hours studying this. How many people have spent 100 hours studying the stock that they hold in their portfolio?
True.
How many people spend 100 hours studying Facebook? Yeah. What is the significance of Bitcoin? Well, let me say it a different way. You just take your money, take everything you earn, you buy Bitcoin, and you wait, and it goes up 20 to 40% a year forever. Or you take your money and you invest it in a bank account and you get 3% after tax and everything goes up 10 to 15% a year in price and you just get poorer and poorer. Or what are you going to do? Buy GameStop at the right time? Are you buy a building, run an Airbnb? I force you to go and forcing you to be a hedge fund manager is horrifically inefficient for the society. It's just as inefficient as saying, okay, be your own dentist and doctor, right? If the medical system was broken, you have to be your own doctor. It's not good for society. What happens? People die 20 years early is what happens. So when you have to be your own banker or be your own hedge fund manager, what happens is you just get poor or you lose faith in the future. If I told you your money was going to be worthless in 36 months, what would you do with it? You would spend it. What if I told you your money's going to be worthless next Monday? You would go out this weekend, make it decadence weekend and you would just blow it all. You would buy anything. Things you don't need. It's like, if it's for sale, I'm just buying it. So Bitcoin actually solves the problem by saying, well, what if you just had a money that the government couldn't debase, the bank couldn't steal, that would last forever? Okay, it profoundly changes incentives, because now a corporation, instead of buying back its stock or instead of dividending out its cash flows, would just keep the money. And the money would go up in value 20, 30% a year. So that's what MicroStrategy did. Like, what's our secret, right? We're just holding the money and it's an appreciating asset. Let me try to make one more analogy that might help. It's like, you're an athlete, your blood is carrying oxygen. Oxygen is energy. If you're an athlete, you need the oxygen to circulate and you need the blood. So before your race, I show up and I say, well, conventional wisdom is I need to bleed you now. So I take a bunch of your blood and now you run the race. And then next week before the game, I show up and I bleed you again. And what if I just bleed you every week? What if I bleed you every day? Are you as good an athlete? If you're not sure about this, try this experiment. But I think any athlete will tell you, no, the goal is to have as many red blood cells and as much oxygen in your bloodstream when you compete, not to bleed the blood out of your system. So when the government is telling you you should use a currency, the currency is the blood of your corporation or your family or your civilization. When I'm inflating the currency, I'm bleeding the civilization. And in the extreme, if you do this thought experiment, if I just double the currency supply in a banana republic and your company had whatever, $1 million worth of currency, but I double it and now it only buys half as much, and I double it again and it buys half as much again. You see it's,
yeah.
Now take it back to MicroStrategy. In 2020, we had 2,000 people working as hard as they could work to generate $75 million a year in cash flow. And then we had $500 million of actual assets. And then the government was increasing the currency supply by 20% a year. At 15% a year, if they increase the currency supply at 15% a year, then you're losing $75 million of capital value of wealth every year for the 75 million you're winning. So at the 15% inflation rate of the money supply, 2,000 people are working as hard as they can, doing 100,000 things right for an entire year to stand still. And if I crank the inflation rate up to 30%, I tilt the playing field such that you're running as hard as you can and you're falling backwards. So another way to say it is everything you do is worthless.
There's only one thing as an average American. There's only one thing, only one hang up I have. It's that I feel like I'm a little late to the party. There's no way I can accumulate one whole Bitcoin. I mean, at this point, I'm shooting for 0.1 Bitcoin. So, I mean, I guess my question is 0.1 Bitcoin of any significance?
New York was the greatest city in North America by about 1776. And you would have been late to the party. But the question is, would you buy a city block in New York in 1776? Or if you waited till 1876 and you were really late to the party and New York was the greatest city in North America, was it too late to buy a city block in New York City in 1876? Or how about 1976? If you were 200 years late to New York City, if you look at the property values of New York in 1976, what you'll find is you would be rich if you had actually bought real estate in New York in 1976. So the answer to the issue is in every economic system, every economic empire, there's always one city, one place one network where people gravitate to. In the ancient Med, it was Carthage for a while, and then it was Rome, and then it was Venice, and eventually the French Empire terminated in Paris, and the British Empire terminated in London, and then eventually the American economic empire terminated in New York, And there are reasons why. It's just everybody comes together in that place. Even today, New York is still the economic epicenter of the United States. And so Bitcoin represents the economic epicenter of cyberspace. It is the one place where if I want to create a digital application, if I want to move money at the speed of light, and I live in Singapore, I'm using Bitcoin. If I live in Paris, I'm using Bitcoin. If I live in Moscow, I'm using Bitcoin. If I live in China, I'm using Bitcoin. So you see, everybody in the world that actually believes in the idea of a digital asset that wants to build this as a treasury reserve asset, they're going to gravitate toward the most powerful network. Why? Because everybody else is gravitating there. Why do people go to New York? Because the smart money is in New York. I could go to New York 20 years ago. I could take 10 meetings. I could raise $1 billion in 2 days. So why would you be so stupid as to go to New York? Well, because that's where the money is. The money is in New York. So I went. And what did I bring with me? I brought my brain power and I built my business there. And so I then reinforced that network effect. You want a cheap apartment? I'll sell you a $4 million apartment in New York, which looks expensive, or I'll sell you a $42,000 apartment, in some random suburb, in a third world country. But the point really is, which is the better real estate investment? It's not a matter of the cost to buy the thing. It's a question of how secure is the network you're buying into. And everybody will tell you, you buy the beachfront property in Palm Beach or Miami Beach, you're better off to buy a house on land than to buy the apartment. You're better off to buy the apartment in the good building than the bad building, and you're better off to buy the apartment in the good neighborhood than the bad neighborhood. And you're better off to buy the real estate in the capital city of Rome or London or Paris or New York than to buy the real estate in the 13th biggest city in the country when the inflation comes. So that would be my answer to that question.
Don't forget to like, subscribe, and hit the bell for more deep dives. Be sure to follow us on X, where we post daily updates about crypto. Sign up to our weekly newsletter where we cover everything that's happened in crypto. Check out our podcast where we post weekly summaries in audio form on what's happened in crypto. And finally, make sure to check out the WAGMI AI agent that we are building to continuously bring the latest and greatest within crypto 24/7. I will be dropping the links in the description below. Don't miss out. Thanks for tuning into WAGMI. Don't forget to like, share, and explore our other episodes. Catch you on the next episode. Have an amazing day.